Every year, usually sometime in May, a quiet panic spreads throughout the British expat communities across France. It starts with someone posting in a Facebook group, "Has anyone done their French tax return yet?" And within minutes, there are 47 replies ranging from "What French tax return?" to "I've been here 6 years and I just guess." If you've ever felt that same creeping anxiety as the deadline approaches, or if you're new to France and wondering what on earth the Déclaration des Revenus actually involves, this video is for you. It's really not as frightening as the French bureaucracy would have you believe, though I appreciate that's not saying much. Right, let's get into it. Welcome back to the Expat Accountant. I'm Ad, a UK qualified accountant and British expat living in France. So far we've covered UK tax residency, French tax residency, UK pensions and UK property capital gains tax in the previous videos. Links to all of those are in the description. Today we're tackling the French income tax return, what it is, who needs to file one, what you need to declare and how to actually do it. Quick disclaimer, as always, this is general information, not personal advice. Right, let's get into it. Let's start with the fundamentals. France operates a declaratory tax system, meaning it's your responsibility to declare your income each year and calculate what you owe. This is broadly similar to the UK self-assessment system, though with some important differences that we'll get to. The French tax return is called the Déclaration des Revenus. It covers the previous calendar year, so the return you file in spring 2025 covers income earned in 2024. France uses the calendar year, January to December, not the UK tax year of April to April. It's one of those differences that sounds minor but catches people out when they're trying to work out which year's income goes where. Who needs to file? If you're a French tax resident, which we covered in detail in video 2, you must file a French tax return declaring your worldwide income every year without exception, even if you have no French income whatsoever. Even if all your income comes from the UK, even if you think France won't owe you anything, you still file. France likes to know. France always likes to know. First-time filers. If this is your first year as a French tax resident, you cannot file online initially. You'll need to file a paper return for your first year, after which you'll be set up in the system and can file online going forwards. Your local tax office, the Centre des Finances Publiques, can help with this. They are, in my experience, considerably more helpful in person than their reputation suggests. Bring a number, bring your documents, and bring patience. The French administrative system rewards patience. Right, deadlines. This is important, so pay attention. The French tax return filing period opens in April and closes in May or June, depending on where you live. France divides the country into zones, départements, and each zone has a slightly different deadline. The logic behind this is presumably to prevent the entire country filing on the same day and crashing the government websites simultaneously. Whether it achieves this is debatable. Online filers get a later deadline than paper filers, another good reason to get yourself set up online as quickly as possible. The exact dates change slightly each year, so I won't quote specific dates here. Check on impo.gouv.fr in March each year for the current year's deadlines. What I will tell you is that the deadlines are firm. The French tax authority, the DG FIP, does not do extensions as a matter of routine. Miss the deadline and you face an automatic 10% surcharge on any tax due, rising to 40% if you still haven't filed 30 days after receiving a formal notice. These are not gentle nudges, they mean it. Do, however, bear in mind if there are extenuating circumstances why you have missed the deadline, such as ill health, you can apply to have the penalties turned over. But try to file on time if you possibly can. Put the deadline in your calendar now. Put it in twice. Tell your spouse. Consider a small sticky note on the fridge, whatever it takes. So, what actually goes on the return? As a British expat in France, this is where it gets interesting. And by interesting, I mean considerably more complicated than your average French neighbour's tax return. French employment or self-employed income. If you work in France, employed or self-employed, this goes on the return. Your French employer will provide you with a summary of earnings, similar to a UK P60. Self-employed has its own sections and its own complexities, which I'll cover in a dedicated video. UK rental income must be declared in France, even though the UK also taxes it. You declare it, claim the credit for UK tax paid, and France taxes any remaining amount. The paperwork is slightly tedious, but entirely manageable. UK pension income. State pensions, private pensions declared in France. Government service pensions declared but credited as we discussed in video 3. All of it goes on the return. UK dividends and interests. These are declared in France. There's a specific section for foreign income and a specific section for foreign tax credits. It looks intimidating the first time. By the third year, you'll navigate it without breaking a sweat. Foreign bank accounts. This is the one people consistently forget. If you have a UK bank account, and you almost certainly do, you must declare it on your French tax return. There's a separate form, the CERFA 3916, for declaring foreign bank accounts. The penalty for failing to declare a foreign account is €1,500 per undeclared account per year. That adds up remarkably quickly for something that takes approximately 4 minutes to complete. Capital gains. Any capital gains from the sale of assets, including UK property, as we covered in video 4, must be declared. There are specific sections for different types of capital gain, and the interaction with foreign tax credits requires care. Worldwide income, the catch-all. If you have any other source of income from anywhere in the world, it goes on the return. France is comprehensive in its approach to taxation. Admirably so if you're the French government, somewhat less admirably so if you're the person filling in the form. One of the most important differences between the French and UK tax systems is that France taxes households, not individuals. You and your spouse or civil partner file a joint return together as a foyer fiscal, a tax household. That sounds like an administrative inconvenience, but it can actually work significantly in your favour. France uses a system called the family quotient, which effectively divides your combined household income by the number of parts in your household before calculating tax. A married couple with no children has 2 parts. Add children and the number of parts increases further. The practical effect is if the one partner earns significantly more than the other, the income splitting effect of the family quotient can reduce your overall tax bill considerably compared to being taxed individually. This is one of the genuine advantages of the French system over the UK system for households with unequal incomes. Dependent children, certain disabilities and other circumstances can also increase your family quotient and reduce your tax bill further. It's worth understanding your household's specific situation And if you have recently divorced, remarried, had children, or had children leave home, your family quotient changes and your tax position may change with it. Right, the practical bit. How do you actually file? The French tax return is filed online at impot.gouv.fr. You'll need to create an account if you haven't already. You'll need your tax reference number, called the numéro fiscal, which is on any correspondence from the DG FIP. If you're filing for the first time and don't have one yet, your local tax office can issue one. Once logged in, the online system is actually reasonably user-friendly by French government standards, which admittedly is not a particularly high bar, but still. It pre-populates certain information that the DG FIP already knows about, French bank interest for example, and guides you through the various sections. The main form is the 2042. There are some supplementary forms for various types of income and credits. The 2047 for foreign income, the 3916 for foreign bank accounts, and others depending on your situation. First time through, it looks like an administrative assault course. Second time, it's considerably less daunting. And by the 5th year, you'll be adding it to your calendar with the same mild resignation as your car's MOT. One practical tip, don't leave it until the last week of the filing period. The AMPO's website does get busy towards deadlines, technical issues do occur, and having a week's buffer means a minor technical problem doesn't become a missed deadline and a 10% surcharge. And if the whole thing feels genuinely overwhelming, particularly in your first year with multiple sources of foreign income to declare, I highly recommend you get professional help. Getting your first French tax return right sets up the template for every subsequent year. Getting it wrong can take considerable time and correspondence to unravel. Believe me, I've seen it. Once you've filed, what happens next? France issues a tax notice, the avis d'imposition, usually in the summer, showing your declared income, the tax calculated, and what you owe or are due back. Read it carefully. Check that the figures match what you declared. Errors do occur, occasionally in your favour, more frequently not. Now here's something most people don't know, and it's genuinely useful. The French tax declaration system reopens every August, specifically to allow corrections. If you filed, received your avis d'imposition and spotted a mistake, a forgotten bank account, an income figure that doesn't look right, a credit you missed, you can go back into AMPO in August and correct it. This is not widely advertised, which is a shame because it is a remarkably civilised feature of the French system and one the UK self-assessment process could frankly learn from. Use it if you need it. If you owe tax, France will collect it either by direct debit from your French bank account or through a payment portal on impot.gouv.fr. If you're a regular filer, France may also set up monthly instalments, collecting estimated tax payments throughout the year with a final adjustment when your return is processed. This smooths out the cash flow, but does require you to have a French bank account set up, which, if you haven't done this yet, is something to prioritise. If France owes you money, perhaps because of tax credits for UK tax paid, it will be refunded to your French bank account, usually within a few weeks of the avis d'imposition being issued. It's not quite as exciting as finding a £20 note in an old coat pocket, but in a good year it comes to considerably more. So, to summarise, if you're a French tax resident, you must file a French tax return every year declaring your worldwide income, regardless of where that income comes from. The deadline varies by department and changes slightly each year. Check impot.gouv.fr each March Declare everything: employment income, UK rental income, pensions, dividends, interest, capital gains, and of course foreign bank accounts. The family quotient system means joint filing as a household can work in your favour. File online, file early, and don't guess. And if you spot a mistake after filing, go back in August and correct it. The French tax return is genuinely manageable once you've done it a couple of times. The first year is the hardest, particularly for British expats with multiple UK income sources to declare alongside French ones. If that's your situation, I suggest getting professional help for the first year. Next week, I'm covering something that comes up a lot, more than almost any other topic. What happens to your UK ISA when you move to France? Spoiler alert, the answer is not what most people would hope. Subscribe so you don't miss it. Leave your questions in the comments. I read every single one, and I will see you next Wednesday.